All right. Well, thanks for coming back this week. Alex and I come every week to you talking about mortgage financing, rates, things in the housing industry, and hope you enjoy our newsletter and our discussion here. A few weeks ago, 2 weeks ago, because we take turns writing the newsletter, I write it 1 week and then Alex, I came up with the topic of affordability and how to make houses more affordable. I came up with a couple of ideas, and since then, I've come up with more ideas. It's almost funny. It seems like once I wrote the article, I got all these ideas, and then I was just reading the Wall Street Journal, and I read the Wall Street Journal actually in its paper format, so it doesn't know an algorithm. It doesn't know that I've been looking or maybe thinking about affordable ability for homes. And there was a response actually back that I thought a reader responded to as a letter that I thought was really, really interesting and got me my more ideas going about making things affordable. And, we talk about making houses affordable. What really can we do about it? There are things that, people say we need lower rates, we need more houses. And I think we need all those things, and we need lower prices. And to get lower prices, we got to create higher inventory. That was sort of my gist of my article 2 weeks ago. So this week, I'm just going to talk about some more ideas I have. Alex doesn't know about these ideas. I came up with these additional ideas, and Alex and I haven't had a chance to talk about them. So it'd be interesting to see how he thinks these will work or whether he likes them at all. So
well, you did forget your tax idea, which I do think the tax idea, just to briefly mention, was basically
that's last week's.
Primary home. There should be no capital gains tax up to $1 million. It's kind of what I think. But some people say no capital gains tax at all. But I think if you moved it to $1 million, you get a lot of these kind of retirees, kind of in Drew's era, to say, if I can get $1 million and not be taxed, that sounds pretty nice. I'll take my big check and go to Puerto Rico and see you later.
Right. So now I have 6 ideas essentially to making houses more affordable. Some of this is to create more inventory. Some of it's to be an incentive. But I got 6 ideas. My favorite one I like is currently many people will build a house, especially on the Outer Banks, intentionally to have an Airbnb room downstairs to rent their house, a portion of it. That's very typical. Alex actually did it when he built his house and did it for the first year or two that he owned it. He was single, didn't have a wife, so he maybe thought having some extra income would be really beneficial. So currently, we do not allow borrowers to qualify if they tell us they're going to build an Airbnb to use that income. In other words, they make, say, $60,000 a year. That's not unusual for a first-time home buyer, $5,000 a month. But they could rent their apartment downstairs for maybe $2,000 or let's call it $2,500 a month. That was not highly unusual, especially for seasonal rentals on the Outer Banks. It wouldn't be unusual in some markets for a monthly rent anyway, for a nice apartment downstairs, so to speak, in somebody's home, especially a new home. So that's $30,000. Now the borrower's income is essentially $90,000. Now, we might use a percentage of it and things like that, like we do with traditional underwriting for rental income. But using rental income would be just a way to expand somebody's income so they can qualify. And these are not hard numbers to get. You can get rental projections really very easily. They're pretty accurate, and you know that the borrower is going to be able to achieve this. There is some learning curve to be a landlord, but, at least on the Outer Banks, it's been very successful for buyers. The maddening part about this is that we already use Airbnb rental income on somebody's home if they want to refinance. But if they want to buy a house, we don't allow it because it hasn't been rented yet. But if you come to buy a house down the Outer Banks, you want an investment rental property, we'll use rental projections on a house that we don't know what the rents are from the previous owner. And you can buy and use rental income. Buyers, first-time home buyers is all I'm saying. If they could use rental income to qualify, it would really help from Airbnb rentals.
Yeah.
Number two about that.
So just to circle back, you can do if you were going to buy a house as investment, you can use future rental income to qualify on the property you're buying. If you're a first-time home buyer, well, you're not buying as investment, and now you don't get the rental income on the property, but you are going to have potentially, if the house had an extra room, you are going to have a tenant. And so Drew's saying as a first-time home buyer, given the fact that the person probably demonstrates some property management skills, they could have a tenant and therefore increase their income, for his example, by $30,000 to $90,000. Just to clarify a little bit about
really
the
think they need to have management experience. I think we should just use 75% and expect that they'll have some vacancy. You could even drop it down to a lower number, like 60% of the rents that you might use, because to expect some vacancy. But in a Raleigh market, you might rent it year round. On an Outer Banks market, you might rent it by the week. But in many places, you would still do it by the week or even by 2 or 3 days at a time. I mean, business people are coming in and out of town. They're looking for a nice, quiet place that's less expensive, maybe. And some people like Airbnbs versus hotels.
Yeah.
So I think it's reasonable to assume that there's some amount, whether it's 60% or 75% of the rents that somebody might be able to get, help them buy a house. Helps them offset the payment, helps them buy the house. This number two thing about this is that, and this is only for first-time home buyers, you can't own multiple homes and say, oh, I'm going to go buy another primary and I'm going to do this with another primary. If you don't own a home, this is what you just a first-time home buyer. You don't own other houses. And is that we don't tax the income that you might get from the Airbnb. On top of that, we don't even make you fill out a Schedule E, which is what people who report rental income do. Don't make people's taxes more complicated who are first-time home buyers. Make them spend more money with CPAs. If you're a first-time home buyer, you own no other homes. You don't have to file it. You don't have to report it, and you don't have to get any tax, of course, on the rental income.
Yeah, interesting.
So that's the first one. The second one is to eliminate totally property taxes. Don't have property taxes on primary residences. Primary residence property taxes are probably $3,000 or $4,000 at a minimum for most people, and sometimes they're more. So if you eliminate property taxes, how are you going to fund schools is always the complaint, and other services that local people have. But you would still continue to tax rental properties. They're taxed on value and a millage rate. That would continue.
Interesting.
Okay. So there is a downside to that, and we'll talk about it. But that's the other one, is to eliminate the tax on primary residences for everybody. Okay? Not just first-time home buyers. Nobody pays property taxes on their primary. But if they own another home, a second home, or an investment property, they will continue to pay taxes.
Yep.
What do you think of that one?
I think that's an interesting idea. I mean, I think obviously some redistribution of how we're going to use, or I guess, because you're going to lose income as a county, right? So,
no question.
So
the
that's going to be
cities and counties will freak out about it.
Yeah.
But the states that are considering this are basically saying they're going to increase the sales tax by 2 or 3 cents. That's not a big increase in sales tax to offset that. And then the other part is you're still collecting it on rental properties. And I think the potential is that's a pretty negative for rental properties. Like I'm having to pay, and of course, property taxes for rental properties could go up because of that.
Yeah.
So it's because everybody's not paying it on their primary, they probably would go up. And so if they continue to tax it under the traditional value millage rate model that we use today across the country, they would probably go up. But what would the owners of these investment properties do? They would go, oh, I don't want to own anymore. They would be encouraged to sell, and it would increase inventory, and it would also lower prices. We don't really want prices to collapse, but it would put some pressure, I think, downward pressure on people who own rental property. Or it could make rental property more expensive, encouraging more people to buy because you got to pass this tax along, so to speak. Or you could restructure how you tax rental property and tax them based on, say, the gross rents. Like, if we're taxing on a millage rate, which is value, say a $500,000 rental house, taxed at 1%, that's a $5,000 tax. But they say doubled it and it went to $10,000, the rental property owner would be not very happy. He'd have to either raise the rents or feel like he's got to sell the property because he's got a negative cash flow. But the government could say, well, instead of taxing it on that traditional method of value and millage rate, let's just tax the gross monthly rents. So the gross monthly rents on that property are $3,000 a month. That's what the landlord's charging on that house. It's a nice 3 or 4 bedroom house, and pay, a 5% sales tax on $3,000. So that would be a tax of $150 a month. It'd actually be a lot less, because 150 times 12 would be, $1,800. So the investors would love that method as opposed to that. But you can figure out a method that is where it doesn't encourage them to sell. At the same time, I really think there's too many investors, especially these big industrial investors who own houses. There are 1 million houses that are currently owned by BlackRock type, not specifically right, but institutional investors, I should say. Yeah. 1 million homes. Just think if there was 1 million, half of those homes hit the market because it became unattractive, that would be pretty good for the market as far as making houses affordable. Okay, so that's number 2 today. Okay, number 3, need to speed up probably, is allow lenders to charge a prepayment penalty. Currently, we don't charge prepayment penalties on primary residences. The one product we are allowed to charge prepayment penalty on is very popular, and people take the prepayment penalty all the time. It's rental property loans, those loans we call debt service ratio coverage loans. And we know as loan officers that if we price a loan with or without a prepayment penalty on these investment products, the rates are about 0.5 point lower. Very easy. Borrowers want to stay in their houses longer than 3 years anyway. Allow prepayment penalties, and then Fannie Mae can manipulate the rates lower. They already manipulate rates with what's called loan level pricing adjustments. I don't want to get into that too much, but they do manipulate rates so that they get the higher rates for primaries and so on and so forth. They could do the exact same thing and not, quote, mandate it. So it sounds like they're trying to control the market. And the rates could be as much as 0.5 point lower for 3 years. If you give a 5-year, maybe they get a 3/4 rate reduction.
Interesting idea. But it would encourage people to hold their house, just live in it, which,
it would tell them to live in it for 3 years, or they pay a prepayment
potentially, you would prevent someone from coming on the market because they have a prepayment penalty.
Well, yes, that's true. It is true, but people know whether they're going to sell a house in 3 years or 5 years anyway. When they buy the house, okay?
Typically.
Yeah, I mean, or would they even refinance the house?
Yeah.
They say, well, I'm not going to take the prepayment penalty because I know that, I'm going to sell the house in 24 months. I'm only here with this job for 2 or 3 years, and so it does keep houses off the market to a degree. I think that's a valid argument, but it would also get rates lower immediately. So immediately lower rates for first-time home buyers.
No question.
But I think it should be across the board. We should be able to offer prepayment penalties. Customers don't really like them. We get asked all the time of borrowers if this loan has a prepayment penalty, and they don't. So we don't even. Most states don't allow it for residential properties.
Yeah.
So the fourth one, the last new idea, this sort of sounds maybe crazy, but where can we find real estate to build more houses that might be that at one time was a productive use of the property, but no longer is? And so if you drive into a place like, I'm going to use Durham as an example because I have my other sons live in Durham. There are churches and schools in downtown Durham that are sitting on prime real estate. They don't pay taxes because they're churches or they're private schools. Private schools and churches don't pay property tax. So they're sitting there not paying any tax anyway. They're good for what they do, but sometimes these churches especially aren't any longer being actively used. Their congregations are small, or the church may not be used at all. The state rewrites a law that says if you want to build residential housing on these properties, you can immediately. There's no rezoning appeal that you have to go through. If you're a nonprofit, not paying property taxes, and you want to build single family homes or sell your property to a developer, we'll let you do that immediately. All you got to do is submit plans to get approval. There'll be some approval process, but you can build homes in that area as long as 50% of those homes are for affordable housing units. So you open up inventory of real estate that's not being used or is very valuable and would be best used for single family or multifamily residential property. And taken to an extreme, you could say that you could build anything height-wise, so you could build multiple units that's within the block of current height restrictions within 1 mile, because they might want to build up instead of just build individual single-family homes. Okay. So
makes sense,
because there's a lot of not in my backyard. I don't want you to do that here. It's changing. That's why you have the state come in and say these particular properties can be easily converted. You don't have to go through the zoning process.
I like the primary home have a potential renter the best. I think that one, there's just the ability for people to find housing to rent is a huge problem in a lot of areas. Of course, it's a problem on the beach, but it's they've done what has happened as a result of people needing a place to live is they do pad splits. All the investor talk right now is all about how you can do a pad split, which a pad split basically, to my understanding, which I'm not perfect here, but basically you have a home of 4 or 5 rooms or 4 or 5 bedrooms, and you basically can rent like per the week or per the day. And, it causes a lot of different challenges in the neighborhood sometimes, and people don't like it. And it's also a high turnover rate, and people sometimes are untrustworthy. But I think if you, in those situations, the pad split or the house is owned by the investor, and the investor doesn't live at the house. And the point that I'm making here is that if you did this for a first-time home buyer, they'd feel a little bit more accountability because they live there.
They're definitely going to be more. If they start hearing people party and banging downstairs or whatever, they're not going to.
Right. So you would get rid of this whole investor pad split deal that's going on and replace it with, I think, a much better kind of outcome of people actually wanting to take care of where they live versus 5 or 6 people living in a house that all don't know each other that are going to treat it like because they're going to treat it really poorly because they don't own it. So I see that as a really good way to lower the cost of living for people that can afford it, to be able for a first-time home buyer to be able to afford buying the house. And I just see it as a win-win on a multiple levels there. So when you see a win-win like that, I mean, you always want to look for, multiple reasons why things are beneficial. And I think that one just does. It's just that simple.
Yeah.
And honestly, most of the people that I've helped build a house down here or people like myself, we already accounted for it. We already put in the Airbnb
You planned
room.
it that way.
I planned it.
Your house, you can do it and if you can't do it, it makes your house more marketable when it comes to sell it.
It definitely does.
And if things get bad financially, you could always rent the house.
Rent the space. If you got a problem.
The other ideas brought over from last week quickly were eliminate capital gains on the sale of a house, period, no caps. Alex thinks maybe ought to be limited to $1 million, but that's a pretty large cap. That would be doubling it for married people, because currently it's 500,000 for married and 250 for single. Something to eliminate that, because the reason people that are older, like myself, who've owned houses for 30 or 25 years, aren't selling is partly because they don't want to pay a capital gains tax. They know, honestly, that when they become deceased, that their kids will inherit it. They'll get the stepped up basis and they'll pay no tax at all when they sell it.
Yeah.
The other part is that when you allow this, people will turn over their houses more often because they can make money. They get wealthier. They own the house outright over time. And what they do is they typically go out and build a new house, not just go buy another house. At least on the Outer Banks, that was what they were doing when this was the case before. And so you're increasing inventory by the house getting sold and the guy going to build a new house every time. I think it's more powerful than people expect.
Yeah, I agree.
And the last one that I've had last time, I don't think Alice is wild about, but I still want to promote the idea that we have 100% financing government program, so to speak, like FHA and VA currently, for borrowers who want to take mortgages that are 15-year fixed. they're not making any down payment, but they're making large payments to build equity. And within 2 to 3 years, they've made more principal and have more equity than they will under the same FHA program that's out there today. Because FHA is 30-year fixed rate, and they basically finance 96.5%, but they allow you to throw in funding fee and everything else. So you really don't have even 2% equity in those deals. And so you're paying 30 years. You have no equity built up. If you take the 15-year fixed rate, you'll have equity built up. You'll own your house in 15 years. And it would encourage builders to build houses that would qualify for 15-year mortgages. Yeah. That's the thing. That's the other thing, is it would help borrowers, but it would also say builders would go, I'm going to build houses that people can buy under 15-year mortgages. And they'll figure out a way to do it if they really think they can sell houses.
Yeah.
So there's 6 ideas. 5.
So
that 6 count is 4 today, and then a capital gains and that 15-year fixed.
Yep. All right. Well, I got to get going.
Okay. Well, listen, thanks for listening. Appreciate it. And Alex says he's busy. So have a good week.
All right. See y'all later.
Thanks.
Bye.
Bye.